invite to the stage from NFU Mutual, their underwriting manager, Rosie O'Gara. Rosie. And Vice President of National Corporate Practice, Marsh, Stuart Osmond, and Director of Motor HDI Global SE, John Shepherd. So we have here now a panel of insurance and telematics experts who are going to help us demystify the dark art of fleet insurance. I'm going to start with one question, and I think this is very important. We talk about the driver shortage. We talk about encouraging younger people into the industry, giving people careers. How can you as an industry help us get younger drivers in without penalising them on insurance? Difficult one, isn't it? But it has to be confronted.
Well, there are a number of schemes ongoing around the country where operators are pooling together to get drivers in through local colleges, universities, sharing the drivers when they're coming out the other end in terms of trying to increase young or less experienced drivers in. I think there's a bit of a stigma that if you get a young driver in or an inexperienced driver, you're going to be paying huge premiums. Typically, you might just be paying an increased excess for that first year or so. If the driver's older, you wouldn't necessarily get an excess at all. So there's plenty of opportunities going on with regards LEPs and local government funding. There's operators, I live in Southampton, there's a group of operators who've pulled together over the last couple of years, and they're now getting the benefits of drivers coming out and populating the workforce.
But with the high standards of driving excellence in this industry and the levels of compliance, and now you've got your telematics, is there not a case to be answered that you've really got to look at this young driver profile, assess the risk and encourage them into the industry?
So my view about this is that the young driver stigma is driven by the personal line sector. So there are all these claims coming through for young drivers, and that cannot be argued against. The difference in the haulage sector is you're dealing with professional drivers. My view is you've got to show how good those drivers are, and the use of the telemetry data, I think, is the way forward.
Yeah.
You have to get underneath the bonnet.
Okay, now the telemetry thing is really important, isn't it? You can quantify risk, you can quantify safety record, you can quantify driving standards, driving excellence, now empirically. You don't have to do it with a postcode or area or anything like that, all that old prehistoric stuff. Why then, given that you've got all this data, do premiums not go down?
Because claims do not go down. So the industry generally, the question you just asked about what drives premiums, claims drive premiums. And safety record is hugely important. If you look at what Nigel presented earlier this morning from Bibby about what they're doing in terms of using the data to drive improvement in the driver record, that ultimately will improve your claims record, and that ultimately will improve your premium. It's as straightforward as that.
So the other answer I would have put on that list is all of the above, because all of the above influence the premium from the insurer. So when we look at risk, we look at the whole risk, we look at the entire risk profile, the sort of goods that are being carried, the sort of distances that people are driving, the numbers of vehicles, the experience, the record. So we spend a lot of time with clients and their advisors getting to really understand that client and then price those risks individually. So as John said, you know, the biggest, by far, the largest component part of that is the claims experience, but all of those aspects are also considered. And the more positive they are, the more positive we can be about how that influences our view of the risk going forward.
And programs like the Microlise Driver of the Year Awards, will you be at a place where you can actually offer premiums for drivers who have gone through this process, offer reduction in premiums, who have shown to be cognizant of the need and to really train up?
So with fleet insurance, we're looking at the whole risk. Yeah, we're not just looking at single drivers. So what we want to see is the driving record for the whole fleet improve.
Okay, so inevitably that process then penalises those drivers and disincentivises those drivers who really want to be the best, world-class drivers. And you can understand it from an operator and a driver point of view that they're not getting that feeling that it is worth chasing that star of excellence. And I think as an industry, if you'll forgive me, that's something that would add an awful lot of value if you can highlight and reward with lower premiums drivers and operators who really do demonstrate excellence when it comes to driving skills.
One of the other things to say is I won't try and defend the insurance industry, the history behind it, but as an industry we don't move very quickly in embracing the technology. At HDI we're a relatively new player in the motor sector, and we are engaged with clients who are in the telematics space. So we are using that data and we are looking to drive premiums downwards, but it is based on claims record. And the important thing to recognise is that the attritional losses, they cost an awful lot of money, the small incidents, but it's the big losses that we're really here for. And everyone complains about the insurance premiums, how much they cost, but we're making no money on motor insurance as an industry. If you look at the combined ratios, they don't make sense. And Lloyd's, everyone knows Lloyd's are a big, big player in the motor sector. If you go to Lloyd's with a business plan with motor on it, they won't allow you to do motor insurance. So it is becoming increasingly difficult to operate in that space.
It is increasingly absurd that this mandatory insurance that we all have to have, and you make no money out of it, and it's totally crazy. So look, to the operators and the drivers out there, what advice would you give them to try and help reduce their premiums?
So we absolutely encourage investment into risk management, and that is all aspects of risk management. So that is the driver training programs, the auditing. We encourage people to be very proactive about the data that they gather as well. So it's not just responding to events after they've happened, but also the near misses. And that ultimately should feed into the claims experience. So when we talk about pricing risk, we do look back and see what the experience has been, but we also try and project forward, and all of those factors influence the view from a forward-looking perspective as well. Did you want to talk about the total cost risk?
What's clear, Quentin, is with the application of technology going forward, insurers aren't looking in the rearview mirror so much at the past history, looking more at what's going to happen in the future. And there's a multitude of cases and case scenarios, case studies that are showing that actually the driving skills are increasing, claims frequencies are dropping. There's also some where the operators don't operate their technology efficiently, and the claims are going the wrong way, frequencies are still going up. I think what was also important is there's a lot of operators out there only using telemetry to record fuel efficiency. They're not actually getting the full worth of it. And of course, if you as a director are allowing your workforce to do that, you could be culpable when that driver eventually has an incident. So if you've got the data, make the use of it, and make sure you're getting the full benefit out of it.
I would also encourage the investment of time into it as well, because the better the insurer understands the risk, and that's based on the information that's supplied about the whole sort of risk management program as well as the previous history of the risk, the better understanding you have, the more confidence there is about putting the right price forward. Insurer will always be, quite sensibly cautious if there is less information available, because they're trying to assess what the actual risk is going to be in the future.
So this is an interesting point here, Rosie, that you're saying operators and drivers should communicate with insurers more, give them more data, give them more information about loads and who they are and what they do and where they go, for you to be able to better quantify that risk, which might result in lower premiums.
May well do, yeah. Depends on the profile of the risk.
And what does that process involve?
So usually, and I presume that the majority of people here would have an advisor in relation to their insurer, because for a client talking directly to insurer for a complex risk can be quite challenging. So if they have the right advisor in place, and that is, something that obviously some of our panel here are interested in as well, then that advisor should be able to give the advice about what insurers are looking for. Yeah. So a three-way relationship is extremely helpful. So if you have the client, the advisor, and the insurer together working on it, you would all be interested in improving the outcomes of those discussions. We don't want to be always charging more to catch up with poorer and poorer claims. We want it to improve, and we want to be able to reward particularly the best clients who are actually really invested in that. So that requires us to have that level of understanding. So a three-way relationship really helps with that.
In the past, it's always been a bit of a grudge purchase insurance, but actually what it should be is a partnership. Three parties. I also, we talk about a quadripartite relationship because we put the telematics company in there as well. So it's the insured, the policyholder, the insurer, the broker, and the telematics company. And we should all be working in a virtuous circle to drive risk out of the business. That's the way we see the future.
There's a number of elements that make up a risk profile. A broker or advisor should be providing the insurers and the underwriters with every sort of element within that risk profile that actually is going to give the insurers a full picture of the understanding of what they're doing for technology, cameras, telemetry, driver training, induction training, all these facets should come into it. So the insurer gets a full picture of what they're actually signing up to. And that's how you can help, obviously, buck the trend of increasing premiums and start getting the better rates. Because the insurers do want to give the best rates to the best performing risks.
And presumably it's a very competitive market as well.
It is.
Actually, on Stuart's point, we want to select the best risks. So it's about finding the right clients. You know, you guys here at the Microlise Conference, likely to be the right clients. It's about finding the good risks to insure as opposed to the poor ones. I mean, that's always what insurance is about, has been about.
Communicate with your insurer on a regular basis, build a relationship.
Yeah.
And that's not a cost, is it? It's very easy to do, but it could reduce your premiums and strengthen the relationship.
Yeah, it's the investment of time.
Look at it as a long-term relationship as well. You know, chopping and changing every year doesn't help.
And technology, telematics, onboard cameras, what difference has that made, do you think, to driving standards? From the evidence you've seen in claims over the last five years, is it significant?
So we've been trading 4 and a bit years now, and aligning with the telematics companies, and the data we're getting is that the claims frequency is going down. If you reduce the number of attritional losses, the chances of that catastrophe happening are reduced.
So we have evidence within our own clients from prior to the installation to post, and being able to see an actual reduction in claims numbers and claims costs as well. And some of that is about the information that you have available immediately after the event. Some of it is about how the data is used in-house in terms of driver training, etc. And you know, the immediately after an incident, being able to capture that information quickly helps with the defensibility around the claim potentially as well. So there's a number of ways it helps the process, and it actually does show that it flows through into that. So there are different systems. It depends on what the company is using, but they've got to work with the one that works for them.
The cameras are a real eyewitness, aren't they, as to what's happened. So some drivers don't like the idea of having cameras forward-facing or even inward-facing. It should be a partnership, again, as John was alluding to, with insurer, broker, policyholder. It's there to protect the driver, show that what's happened, allow the insurers to quickly gather that information. When the legislation changed a couple of years ago about the MOJ portal, insurers are now duty-bound to deal with claims quicker. If you can get that claim in same day and the insurers can make an immediate decision on liability, that claim can be settled for a fraction of what it possibly would be if solicitors and the like are allowed to charge their normal hourly tariff and rack up. There's a solicitor in the front row there following us on. Just got the daggers in. So the faster you can capture that third party and give the insurers the opportunity to make a decision on liability, the quicker the claim can be settled.
Within the claims world, there's what they call the golden hour, and the golden hour is that time immediately after an incident where you gather the information to really improve your chances of actually following through in terms of the third party information as well. Makes quite a difference.
So to any operator or driver out there who is resistant to onboard cameras and side cameras and stuff like that, technology generally, what would you say?
It's a bit of a culture change, isn't it? I mean, a lot of businesses have had no cameras at all. Certainly the inward-facing camera gives a multitude of reasons as to why an accident may have happened. A lot of drivers feel it's intrusive. It's there to help them, it's there to support them, and I think if you can buck that trend and get the drivers on side, some larger operators have problems with unions, where the unions actually protect the drivers and man the cameras put in. But if you can get that on board, it's a big step forward. You can start seeing, is the driver actually distracted at the time of the incident? Have they been playing on their phone? Have they been fiddling with the radio? And if you can actually discount that and then with the forward-facing camera prove that maybe a third party's changed lanes or braked heavily or done something that's actually caused the accident and it's not the driver's fault. That's great to be able to give to the insurer, that camera footage. This is not our fault, we want this claim defended. And then the underwriter can do their job and make sure that the claims costs aren't racking up, that eventually, of course, pays for the claims experience that John was referring to earlier.
We've also been
sorry, Rosie, after you.
We've also been able to use the camera footage in terms of detection of fraud as well. So where you've been able to see where a vehicle has pulled in front and has been following a liveried vehicle, with knowing that they'll be insured with a really good insurance company, that they'll have some. So they can be a target. So it can help with evidence in that regard. So the big thing really is, as Stuart said, it's the cultural piece around the organisation, and if it works culturally, then we would encourage it. If it's kind of an anathema to today's culture within a company, then think about how you show the value it would bring to the organisation.
Great.
For people to use it positively.
Okay. Right, Rosie, Stuart, John.
So could I just pick up on that point quickly? You asked what the impact would be if an operator didn't have the technology, didn't want to invest in the technology. From an insurance perspective, you're going to end up with a two-tier market. You're going to end up with a price for a well-managed risk which uses all the technology and has all the cultural benefits, applies that in their culture, and one that doesn't. And the one that doesn't will be paying a different price.
Okay. All right. Thank you very much indeed. A round of applause for our panelists. Thank you.